anything could change over the next hour or day. I think most crypto investors are separating into people-oriented short-term and people-oriented long-term. From a short-term perspective, the only thing you can count on in crypto right now is volatility. And so we're seeing a lot of interest in people trying to monetize that volatility as a short-term trade. In the long term, I think if you look at Bitcoin's performance and indeed some other crypto assets' performance, it's been actually very good. It's been very resilient. It's done better than in previous major market drawdowns over the last 10 years. And so I'm heartened from a long-term perspective, but we could absolutely wake up, down 5 or up 5 tomorrow. It's out of our control. So short-term, the play is volatility. Long-term, I think we're in a very bullish environment for crypto. And on a day-to-day basis, it's just exhausting to do so much work just to churn water and end up back where we started.
Matt Hougan breaks through the noise with a compelling observation. The main story of cryptocurrency isn't usually in the price, but rather in the positioning, even in the face of rising headlines, ETF speculation, and shifting regulatory winds. Matt claims that the market is coiling rather than sleeping. The accumulation of institutional demand, more intelligent liquidity arrangements, and more investor sophistication are hidden beneath the flat charts. According to him, the quiet preceding the breakout is actually a refocusing of energy rather than a loss of motivation. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you and enjoy the video.
I think in a level macro environment, there's a fundamental mismatch between demand and supply in Bitcoin. New supply of Bitcoin is 165,000 Bitcoin. Last year, ETFs bought 500,000 Bitcoin. Corporations bought 350,000 Bitcoin. I think governments may buy hundreds of thousands of Bitcoin this year. So there is much more sort of structural demand for Bitcoin than there is new supply. And what that means is existing holders have to sell. We saw existing holders sell at 72,000 from March to November before we ripped up to 100,000. The reason I say 200,000 and not like 162,351 is because I think that's the next level at which existing holders will be willing to sell because they're behaviorally driven humans and it's a nice round number. So I think once the macro market levels out, this fundamental demand-supply mismatch will force Bitcoin up and up and up till we shake Bitcoin loose from existing holders. Maybe they'll shake it loose at 150K, but I'm not sure. I think it could get all the way up to 200K by the end of this year because there is this just dramatic supply-demand mismatch in the market. I'll give you a slightly sad thought, Laura, to kick things off, which I realized this weekend as I was spending yet another hour digging into the on-again, off-again impact of tariffs on the market, which is that the return of Bitcoin over the past month, at least through Sunday, was precisely 0. So all of this angst, all of this worry, all of these hours on X, all of this reading about Tiffin dilemmas, and various macro things amounted to nothing. It's just an extraordinary moment to live in because, as you mentioned at the top, anything could change over the next hour or day. I think most crypto investors are separating into people-oriented short-term and people-oriented long-term. From a short-term perspective, the only thing you can count on in crypto right now is volatility. And so we're seeing a lot of interest in people trying to monetize that volatility as a short-term trade. In the long term, I think if you look at Bitcoin's performance and indeed some other crypto assets' performance, it's been actually very good. It's been very resilient. It's done better than in previous major market drawdowns over the last 10 years. And so I'm heartened from a long-term perspective, but we could absolutely wake up, down 5 or up 5 tomorrow. It's out of our control. So short-term, the play is volatility. Long-term, I think we're in a very bullish environment for crypto. And on a day-to-day basis, it's just exhausting to do so much work just to churn water and end up back where we started. The 10-year treasury market has been crazy. It's been bouncing around like a meme coin. From a yield perspective, it's been completely wild. I think what it's signaling to Bitcoin investors long-term are two things which are almost go back to our short-term versus long-term perspective. So what it's signaling from a short-term perspective is that, whoa, things are changing. We don't know exactly how things are changing, but we know that things are changing. We know maybe that the world is losing its sort of appetite short-term for treasury exposure as a safe haven asset. It's introducing, from a short-term perspective, volatility and risk into people's mind. And because Bitcoin has elements of being a risky asset, that's challenging to Bitcoin from a short-term perspective. I think from a long-term perspective, what we're seeing out of the moves in treasuries and in the dollar is that we're sort of moving to a new monetary order, to borrow Ray Dalio's term. Yeah, and I would just add a thought experiment that investors can run is, what do you think Bitcoin's price is if the 10-year is at 3 and the DXY is at 94? Like, what do you think Bitcoin's price would be? When I run that thought experiment in my head, Bitcoin's price is substantially higher than it is today. And I think, as Matthew mentioned, the Trump administration has been extremely clear about what it wants. It tends to get what it wants. These are things that it wants. And so if we move in that direction, ask yourself, where is Bitcoin at that point in time? I certainly see it in the six figures. I see it at new all-time highs, substantially higher than we are today.
In previous cryptocurrency cycles, when Bitcoin surges, money moves into Ethereum, and then everyone invests in memecoins, Hougan is resisting this old pattern. Not this time, he says. Rather, a new age of cryptocurrency investing is upon us, one that is based on sound principles rather than marketing gimmick. There was more to the recent market movement than a simple risk-on rise. With robust performance linked to genuine utility, on-chain activity, and user growth, it was more selective. Hougan thinks that this will characterize the upcoming cycle, making wise, well-informed investments in initiatives that are actually gaining traction, rather than placing rash bets on everything. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
I feel like crypto feels entitled to what it's had in previous cycles, which is you go into Bitcoin and then you rotate in ETH and then you move out the risk curve until we're all buying digital rocks. And then we reset. And I just think the market has changed. That's true of an asset where the primary value is the speculative value, where the primary thing the asset class is talking about is what might happen 5, 10, 15, or 20 years in the future. In that world where the speculative premium is the dominant driver of returns, it makes sense just to roll out the risk curve. And what you buy is less important than its vol and its riskiness. But I think we're entering a world where crypto is driven more by fundamentals. And so you're going to see people picking apart different L1s. We actually saw that in 2024 and just no one talked about it, right? We saw Solana ripping and ETH falling. That wasn't a risk on, risk off trade. That was one L1 that was capturing real fundamental growth and another that was experiencing a fundamental decline. And we got very divergent returns. I think you're going to see that on each and every asset. I think that's going to be the defining feature of whatever this next cycle is a more fundamentally driven cycle with more differentiation between projects that are gaining traction and other projects that aren't, and less just sort of spray and pray allocation to risk on assets in general. From my perspective, the investors I speak with and the people who sort of I experiment with thought wits in the crypto market think that we're moving into sort of a fundamental market where there is more differentiation between this project and that project than we perhaps had in the past. I think that's somewhat what Matthew is speaking towards. You can make a fundamental case for Hyperliquid. You can make a fundamental case for Bitcoin right now. You can make a fundamental case for certain DeFi protocols. And I think people are going to be focusing more on protocols and projects that are demonstrating fundamental traction. There are actually significant bull markets in parts of crypto right now from a fundamental use perspective, whether that's stablecoins at all-time high, whether that's real-world assets at all-time high, whether that's some of these derivative platforms at all-time highs. Those are really happening. And I think people are just focusing more on idiosyncratic fundamentals than sort of this broad alt season risk on trade. I think that may not be a feature of the next year. I think it may be more idiosyncratic and fundamental than it has been in the past. I mean, one of the strongest correlations that Bitcoin has had over its entire history has been a negative relationship with the dollar. Weak dollar is good for Bitcoin. It's literally denominated in dollars, so it's almost axiomatically good for Bitcoin. And more broadly, it's just generally good. It's just a weakening of confidence in the US dollar, and all of that attributes back into positive for Bitcoin. I've said this before, there are extraordinary statements coming out of the White House, and particularly from the Council of Economic Advisors, about what they want to happen with the dollar. They aggressively want the dollar to be substantially lower. Just as much, I think, as they want the 10-year to be substantially lower, and just as much as they want to reset trade. It's sort of the trifecta that they're aiming at. And, one reasonable assumption is what Trump wants, he tends to get through one way or the other. And I think we can expect dollar lower to be a relatively dominant paradigm over the next 2 years. Everything that's happening from this tariff perspective, everything that's happening from sort of confidence in the US suggests to me that we're going to get that. And so that historically has been extremely positive for Bitcoin. And I don't see why it wouldn't be extremely positive for Bitcoin this time around. I count it as another tailwind behind this long-term bull market.
Matt Hougan urges the cryptocurrency community to reconsider long-held beliefs regarding market cycles in his concluding remarks. He thinks that the days of just switching between Bitcoin, Ethereum, and meme coins are over. When speculation dominated the market and future potential, hype, and risk-taking were more important than real progress, that approach made sense. However, he contends that we are about to enter a new era in which the basics are more important than ever. Investors are beginning to examine the inner workings, assessing genuine utility, on-chain activity, and user growth. We already noticed indications of this change in 2024, not because of a general market trend, but rather because one network demonstrated genuine velocity while the other did not. Solana soared while Ethereum trailed. According to Hougan, the next crypto cycle will be characterized by this type of diversification. It will be more than just spending and hoping for the best. Furthermore, Hougan emphasizes the macroeconomic factors that support Bitcoin. He cites the declining value of the US dollar, which has historically had a significant negative relationship with Bitcoin. Not only does a declining dollar increase the appeal of Bitcoin, but it also indicates waning trust in established monetary systems. Furthermore, the conditions may be favorable for Bitcoin to keep rising since authorities appear to be working toward a weaker currency, cheaper interest rates, and more extensive trade resets. And as always, happy investing.